Yo traders, what's good? So this lesson is literally going to be on market structure and how to see market structure properly, because a lot of people get it confused, and a lot of people actually would disagree with how I use market structure, same way I disagree with how they use it. Probably a lot of people are going to argue and say, yeah, I use it the proper way, and then I'm going to say I use it the proper way. But look, today's lesson is literally going to be on how to spot higher highs, higher lows, lower highs. If you don't know what they even are, then I'm going to teach you in a minute. But I just want to be able to show you the proper way to look at market structure, because it's literally one of the most basic but one of the most important things you're ever going to learn in trading. So you need to get it right from the jump, really. And I'm going to show you how I think you should use it, and yeah, what works for me and have always worked for me. Okay, so let's get onto the charts and take a little look. So I'm going to just do it the way I learned from my mentors and the way that most people actually teach it. I'm going to do it the old-fashioned way. So I know this looks, you've probably seen this before, and this is the most easy, basic way to show it, but I just want to get a rough understanding of what we're looking at, okay? So this is what we would call an uptrend. You're never going to see an uptrend this clean, but funny enough, I just seen a trend underneath on the actual charts, a downtrend, and it looks beautiful and near enough as clean as this. So let me just pull this back up. Here we go. So yeah, this is called a high high because it's higher than this high down there, and then it pulls back, boom, gives you that low. So every single time you make a higher high, there's going to be a higher low somewhere, and I'd have to move this up now because this level's been broken, and there would be the higher low. So this is kind of where the lesson before comes in handy now about candlesticks. Okay, so let's just say candlestick wicked above this level, so it just left a wick. Okay, let's just quickly draw up a little candlestick. So let's just say that this is what price did. Now, would this be the higher high? Because we're waiting for price, to break this level there, this structure, this pullback. So would this wick there be the higher high? No, because the candle didn't close. Candle needs to close. So the only way we get a higher high is even if it was a literal millimeter, centimeter higher than, this pullback candle. Even that's a higher high. That'd be classed as high high, okay? So yeah, let's just assume price did close. Boom, we got our high high. And that's basically an uptrend. Higher highs, higher lows, okay? Total opposite in a downtrend. All right, so let's just flip the chart instead of redrawing everything. So in a downtrend, you have a lower low and a lower high. Same exact, what? Yeah, same exact thing. Why would this be a lower low? Because this low, where price is now, is lower than this low. Okay, and this is the lower high because it's a high in a downtrend, but it's still lower than the high before it. Okay, so that's just literally it. Lower lows, lower highs. Now I want to show you a breaker structure. Show you what breaker structure looks like. So we're in a downtrend. We know where price done this big drop from before, pushing up, because you see price came down and it pushed up. And then when it starts, as soon as it pushes up, you've got to keep your eyes on this level there and where price started pushing up in a downtrend, because as soon as the candle body closes below it, like it did there, or a continuation, it's just breaking through lows, it's breaking through pullbacks, okay, and yeah, making new lows. So that's when we get our lower high, our lower low. So when do we get a breaker structure? Because we can't, count this as a breaker structure now. That's not a breaker structure. We get rid of these lines every single time they get broken. Forget about it. The only way we can get a breaker structure is if price comes up and candle body closes above this area, all right? So as soon as that happens, we get a higher high. And then this lower low will turn into a higher low, okay? Boom. And then the trend just continues on. Most of the time, we're waiting for a pullback again. Get rid of this line again now. We're waiting for a pullback. Now we can draw our line all the way down there. So we are bullish until price decides to come all the way back down and close below there, okay? Unless price comes up now. Boom, breaks through this level. Now we can move our line up there and our higher low up there, and it just carries on until what? Until this higher low gets closed below. And then we're back to a downtrend. Okay. So yeah, that's basically market structure. Really basic. It's a lot more to it, of course. And we're going to take a look now on the charts and yeah, see what it actually looks like. Okay, so look, this is actually today. This isn't even bar replay mode. This is today. This is what's going on. So this is what a perfect example actually of what market structure is and breaks the structure. So we also got a range as well. This is actually probably the most perfect example I've ever come across. So I forgot to tell you as well. Let me just quickly go back up. Showed you market structure when it's bullish, and I showed you when it was bearish, but I didn't show you when it just ranges, when it does this. This is kind of the stuff we want to stay away from, and it's easier said than done because we're always looking for that break and the continuation of a trend. But this video is not about trends, okay? It's literally just market structure. So there's three kinds. You've got your bullish structure, bearish structure, and a range. But there's still going to be an overall direction in a range, okay? So this is the perfect example of the range. Fuck, right, there we go. Perfect example of a range. That's the perfect example of an uptrend or bullish market structure, okay? And then that's the perfect example of bearish market structure. So, like I said, in a range, it's pretty much refusing to break new highs and carry on going, or break new lows and carry on going. It's just literally nasty, really, really shit. They're hard to avoid, but you'll understand when you keep losing, or you keep getting into trades and getting stopped out of break even. That is obviously in a range. So let's pull it back to when it was bullish. So what made this bullish market structure? Obviously because majority of these candles are all green, most of them, and we're clearly going up, all right? But how do you spot a higher high and a higher low properly? So this is the point of the lesson. Let's start from there, okay? So would this wick be the higher high, or would this candle body close be the higher high? Remember, we've done the candlestick body anatomy, whatever the fuck, anatomy. So let's just take it back to that lesson. Open of the candle, low of the candle, close, high, okay? So I'll tell you how to look at market structure, how I see actual higher highs and higher lows. So the higher high is going to be on the candle body close. This is where you're going to mark up your higher high. So don't worry about the wick, because we're going up, we're looking for higher highs, and we're looking for higher lows. Now, would the higher low be the candle body close of this candle, or would it be the wick? It'd be none. Wouldn't even be that. Wouldn't be none. It'd be this red candle there. So actually pretty much, yeah, the same as the bottom of that candle anyway, the body candle close. But this would be the higher low. I'll tell you why in a sec. So this is where a lot of people would argue and say their versions, all right? So a lot of people would say they want to see a curve, and then they put the higher low. Oh, bloody hell. They put the higher low and market structure down there, okay? Or even down there on these wicks. I'll put it on the first red candle that I see, body close, mind, not the wicks. The first red candle, because we're going up, that's that structure there. So if price was to come all the way back down and close below this line, which is below this red candle body close, it'd be a breaker structure for me, okay? I'm not looking for the swing point. Like, these are the swing lows, swing highs. We ain't looking at that right now. We're just looking at how we mark up higher highs and higher lows. Just keep it going. Boom. So as soon as price close, oh, that's massive, right? That's our new higher high up there. Boom. Because that's the highest point right now. Candle body close, not the wick, the actual body close. And that's our higher low. Red candle body close, okay? We're looking for the first red candle. Because even though that doesn't look like a very good structure, and there's not really a nice curve to it like most people are looking for, you go to the 1 minute time frame. It's actual market structure, right? So if price comes back down now and closes below this red candle, then we're bearish in my eyes. We literally broke structure to the downside. So let's keep it going. Okay, cool. Here's our new higher high. And there's our new higher low. Gotta move it up. Just keep moving it up and just keep it moving. Do we move this higher low? Nope. We don't move this higher low because this is literally still the most recent pullback and then push. Okay, so let's keep it going. Right now we're still bullish. Okay, cool. Just had a break to the upside. There we go. Now we put our higher low there. A lot of people would argue and say, no, it's there or it's there because you're looking for the most, prominent pullbacks and pushes. I don't really care because I'm telling you, this is the higher low, like that structure. So it has to be put there. Now, I don't count the body wicks because even though, price got all the way up there, it refused to close up there. We're looking for the body closes. So keep it going. Right, cool. So did we break structure to the downside and did we become bearish for a second, but it didn't close? We're waiting for the body to close. Okay, so it did come down. But if you was to have just entered on a sell because price broke through the higher low and you thought, oh, we're going down, you would have been stopped out. Okay, so we need to see body closes. Still no body close, so we are technically still bullish and going up. Right, we got a body close. There we go. So now we can literally change this to a lower low and that's a break of structure as well. Lower high. We've just broken structure and we've become bearish. Oh, sorry, that's not the lower high. What am I doing? There it is. So the first green candle, you know, that's literally structure. That's the lower high. We carry on going. We pull our lower low down there now. Down the body close. Lower high. Boom. Just broke structure. Made a higher high. Made a higher low. And what did price come and do? Close below it. So made it back bearish. And this stuff happens all the time. It's going to keep changing. You know, it's just how it is. This is trading for you. But this is the easy way to know if we're bullish or bearish. Lower low, lower high. Okay, so obviously you don't know about liquidity yet, but that's just a liquidity sweep. So everyone's thinking, oh, we've closed above this level, so we're back bullish. Nope, it was just sweeping liquidity and dropping. Now, this is nothing to do with liquidity. I'm not even going to try and teach you liquidity yet. I will do a basic version of liquidity sweeps on this course, but that's not for today. We're just focusing on how we spot uptrends and downtrends, market structure, right? So you get the point anyway. So right now, let's just run it for the live market. Here we go. So recently we did break structure to the upside because this would have been our lower low down there. This was our lower high. We broke structure to the upside. So are we bullish or are we bearish right now? Yeah, take a look at that and figure out and see if you think we were bullish or bearish. So we're technically bullish because we've had a break of structure. So remember now, there's our low. Pull it across. That's our lower low. And this little one there, that pullback, is our lower high. So if we pull up price back to there, this is what we was looking at. Boom. Candle body closed above it, making it a higher high. We got a higher high there. Now this would be our higher low. Okay. So until price breaks below this point or above this point, until price breaks below this point, we're bullish. So we need a candle body close below this point. So you see how price has been wicking it, but it can't close below it. Literally tells me we've broken structure to the upside. We can't break back down below. So maybe we're looking for a shift in direction now and continuation up. And this is where, you know, without getting too technical, the lesson on liquidity would be perfect because right now there's so much liquidity resting above all of these pushes down. And why is that? Because think about it. Every single time price gets pushed down from an area and people are selling, what are they doing? They're putting their stop losses above structure or they're just placing their stop losses somewhere like this. And they're not hoping to get taken out, okay? So there's so many stop losses just resting above all of these areas because people have been pushing price down. So they're putting their stop losses there because they don't want to, go on about their day and lose money when price comes all the way back up and does these mad, crazy movements, liquidity sweeps, okay? So when you start thinking smart and you start thinking smart money, then you're going to understand when price comes and breaks up and starts an uptrend, it's going to be targeting everybody's stop losses, everybody's money, because money moves the markets. And the only way it can carry on going down is by taking people's stop losses to move down. And the only way it can move up is by taking people's stop losses to move up. So that's where liquidity comes in. But I'm going way off topic. This lesson is genuinely about market structure. So hopefully you can spot a higher high and a higher low properly now. Okay. And understand that the wicks and the body closes are two totally different things. The wicks are just where price wants to go, but didn't quite finish there. And the candle bodies are exactly what we're looking at for market structure. So hopefully you understand market structure now. But I'm ready to move on. So come back and watch this as many times as you want. And I'll see you in the next one.